Hi everyone, and welcome back to my YouTube channel. It's been a while since I made the last video. I think it was over 4 months now. Obviously a lot has happened and I decided to make another video. First of all, I achieved a big milestone. I now generate over $1,000 a month in passive income from dividends alone. And yes, I know about 11 months ago I released a video where I mentioned that I made $700 in that 1 month, but that's how it was. It was for just 1 month because most companies pay dividends once every 3 months. Some months you make more in dividends, some less, right? So back then, that was my highest month. It was $760 in dividends, but then other months I was making less. Whereas now, what I did is I took the sum of all my dividends for the last 3 months and I divided it by 3, and that basically gave me the average what I get every single month, which is what I can expect to get paid every single month on average. And so currently I'm sitting at $1,012 per month. Just imagine, it's $1,000 a month that I don't have to do nothing for, like literally nothing. I don't have to watch my stocks, I don't have to do like absolute zero. The company is working, they're producing things, they sell services, they collect payments, and basically they pay me. So very exciting, especially when you see that kind of progress. And yes, I know, $1,000 is not really enough to live on or anything like that, but at the same time, it's still a lot of money. You can think about it this way, it's a car payment on a very expensive car. Or it's a couple vacations a year that I literally don't have to work for. At this point, obviously, I'm not going to be taking that dividends out. I'm just reinvesting them so that my dividends basically growing exponentially. Snowball effect, right? When time comes, yeah, I'm going to start taking the dividends out, but I'm not there yet. Although, as some of you may know from my previous videos, I did talk about how, depending on what your goals in life, you could retire on $1,500 to $2,000 a month in other countries. So that's definitely a possibility. And I actually went to Bali last month and spent there 4 weeks trying to see if that's something I want to do in the future. Okay, so let's talk now about the whole stock market and what's happening. Obviously, the stock's been very volatile lately. It seems to be going up and down constantly. Today, the markets were down another 3%. When I look at S&P 500 for last year, it's down 19%. I hate to be the bearer of bad news, but to be honest, I think we are heading for major correction and possibly a recession. The interest rates most likely will be increasing because today they come out with the inflation data, and again, inflation is a lot higher than expected. It's not slowing down. I believe they were expecting something like 8.3 and the inflation was 8.6. And yes, I know it's not much difference, but still, it's actually higher than they were expecting. So there probably will be another rate hike. As Warren Buffett said, the rates bring the stocks down, right? Because most companies, they operate on money that they borrowed from the banks, and when the interest is almost zero, it's a lot easier for them to take the money out and invest it, build something, build factories, build products, invest into research and development. And once they start selling, they can pay that money back with almost no interest. But now it's going to be more and more expensive for them to lend that money. So obviously their profit is going to drop. And because of that, their stock price is dropping. And if you think about it, current stock market, basically what's been happening in the last couple of years is opposite of what's usually happening. Usually, when there's instability, like such things as war or pandemic or anything of that nature, the stock market goes down, right? Because the whole uncertainty. But right now, it's somehow opposite. It's pretty much the first time in history that you have this worldwide pandemic. You have war in Europe, shortage of things, and the stock market just keeps going up. Partly it's because of all the money that was printed in the last 2 years. The problem is it can't last forever. Here's what article I found from CNBC talks about the recession. They think that the recession will hit in the first half of 2023, and the Dow set it lower. The reason the inflation is so high is, as I mentioned, is because, well, one of the reasons is because there was a lot of money printed in the last 2 years. Here's the M1 graph. That's basically the graph of money supply. And you can see that up to 2020, it was slowly raising, right? And at 2020, it hit 4,000. That's in billions, so that's $4 trillion. And then it literally quadrupled within a few months, from 4 trillion to 16 trillion. I mean, this is just insane, completely. And it didn't stop. You can see it's still, after 2020, that's probably about March or April, until now, they added another, looks like $5 trillion. Well, money printing doesn't really work. What happens is politicians try to sell this idea to people, and sometimes people don't understand it, right? They think it's free money for them. And so they elect those politicians, and politicians follow through on this. But that's what happens. The money basically gets devaluated. I like using the example of Zimbabwe, where they have a bill, $100 trillion. The problem is, with that $100 trillion, you cannot buy even a loaf of bread because it's worthless. And basically it just punishes all the people who've been saving money, like they've been told in the past. So yes, as I mentioned, S&P 500 is down a lot. Even YouTubers like Joseph Carlson almost went negative on their investments. But I'm personally actually doing a lot better than average. And I think it's because of the stocks that I've picked. In the last few years, oil stocks haven't been very popular with people, right? Because everyone's just talking how it's area that doesn't have a future. Plus, there's a lot of bad and negative publicity about oil stocks. So a lot of funds don't want to hold oil stocks because of that. But I always thought that that's a wrong view. I really thought that we're nowhere near to be without oil. You need to fill up trucks to deliver food to the stores. You need oil for the jets to deliver things all over the world. Even ships, I mean, things like your iPhone is made in China. Well, how are you going to get it? It's either flying on a plane or on a ship. Well, no matter how it is getting here, you still need oil. Right now, there are no ships that use lithium-ion batteries, and there's no jumbo jets that use lithium-ion batteries. Everything's depending on the oil. Also, even things like growing food. Those big machines that they use, all those combines and stuff. I never heard any of them use lithium-ion batteries. Actually, even the equipment that used to mine for lithium, they all use oil. So the more lithium you need, the more oil you actually need because you need to mine for it. Anyway, so because of that, I did had some oil stocks. Then when the oil went negative for a while there, right when the COVID hit, I actually bought more oil stocks, and I was just averaging down as the stocks were falling. I know I bought Suncor literally at like $16 or $17 at one point, and the lowest it ever got was 15, I believe. And now those stocks are going through the roof, right? The Suncor hit $52 or $53 the other day. So yeah, you can imagine how well I'm doing on those stocks. Like utility stocks are doing very well as well. And one of the reasons is because in times uncertainty, and actually also times when the interest rate goes up like this, people tend to pull the money from companies that don't make any profits into companies that are basically real, that make products, that make profits. Because I mean, really, the whole point of having a company is to make money, right? But when the money is so cheap, when it's almost at 0% interest, when financing is so cheap, yeah, like you have hundreds of companies that basically worth, billions of dollars but they never made a single dollar of profit in their life. Elon Musk actually said a very interesting thing a few days ago, something about that recession is actually good because those type of companies going to go away, right? Because it's basically natural selection. Some of my stocks, beside the oil and utilities, are also like a huge, stable and old consumer staple companies like Procter and Gamble and pharmaceutical giants like Johnson and Johnson. Here you can see Procter and Gamble stock didn't really drop all that much. Neither did Johnson and Johnson. On the other hand, stocks like ARK ETF dropped a lot. You can see it's down almost 70% in the last year, which also shows you how it's not that hard to beat market once in a while for a short period of time, but it's actually a lot harder to beat markets in the long term, like what Warren Buffett been doing for the last 50 years. Kathy Woods with her ARK ETF 2 years ago, basically she was the hottest thing out there because she was, the stock market is going up fast, but her ETF was going up even faster. Well, that's nice, but doing it one time, 1 year, it's not really that big of a deal. Try doing it 5 years in a row or 10 years in a row. Netflix, another example. They basically released previous financial statement and they were down a little bit on their subscriptions, which is not really 100% true. The reason they were down is because they canceled their subscribers in Russia. So that was kind of almost, they did it themselves. But still, it's basically slowing down a lot for them because now people don't sit at home and watch TV the way it was 2 years ago during the pandemic. And since they actually don't make that much profits, the stock went down a lot. And that's the problem with those many growth companies. They go up a lot, but then if anything goes sideways, they crash like crazy. Because they don't actually generate real income, real profit. What I am surprised though, even a company like Google is down 20% for the year. Which I find kind of a little bit strange because Google does make a lot of money. Google doesn't pay dividend, but they do a lot of share buybacks and they're sitting on a lot of cash. But yeah, for some reason, they're down a lot as well. That's why I think it's important to have to hold good quality stocks that generate a lot of cash, sell products that everyone needs, and have power to raise prices on those products if they have to. One example is Procter & Gamble. Already a few times in the last few years, they actually made a statement that they're raising their prices. And because of that, they're able to deal with the inflation and the rising costs of manufacturing. Because at the end of the day, people don't need to buy the latest iPhone. They can skip for a year or even two. The thing is, nobody's gonna skip buying shampoo or toothbrush or toothpaste, soap, laundry detergent. Here's another example I wanted to share. This is the VYM stock, which is the ETF of high dividend stocks. It's actually up 1% in the last year, while S&P 500 is down 19%. And in my opinion, the difference will be even larger as we move ahead and the stock market crashes even further. You have to remember that even the most famous crash of 1929 took 3 years to hit the bottom. And this is what I'm noticing right now is happening. Stocks go down, they recover a little bit, but the trend is down. And it's been happening for last year. So I think it's very important to mention that it's not a good idea to try to time the market. Many try to play this game and they lose. The best approach that's recommended by most people is dollar cost average, where you invest on regular intervals. This way, if stock market keeps going up, your investments are going up as well. If it's going down, well, you can look at it that it's a good thing as well, because then you buying things on discount. A lot of people panic when the stocks go down and they want to sell all those stocks. For obviously, it's understandable, right? Because basically you see your money almost evaporating. But that's not the right way to look at it. I like to compare owning a stock to owning a house in which you live. Let's say you buy a house and you're living in it. The next year, the house price doubled. You don't care, right? Because, well, what are you going to do? Yes, the house now worth 2 times, but you're not going to sell it because you still need a place to live. And the same works backwards. If your house dropped in price, if it's worth, 50% less next year, do you really care? It feels bad, but you actually should be feeling good about it, because now you have to pay less in taxes, because tax property is based on the value of your house. And that's how you should be thinking about stocks and their price. Just because stock dropped in price, it doesn't mean nothing. Unless you're planning on selling it right now, who cares? This is simply a price that somebody else is willing to pay for it right now. And that depends on a lot of different things, and quite often they don't take into consideration the actual profitability of the company. Quite often it's just overall market, how the people feel. Sometimes people just take the money out of the markets because they don't want to be in the market. And the very good companies become cheap. So you should look at it as opportunity to buy more of it. So that's actually my plan right now, is to build a small cash position, about 5 to 7%. The way I see it is, if we have huge inflation, I don't lose that much compared to my overall stock portfolio. But at the same time, if the stock market drops 50-60%, my 7% cash becomes equivalent of 15 or 16%, or maybe even more if it drops more than that. Considering that the chances of market crash are high, I think it's worth doing it. Sometimes I'm not selling any of my investments. The worst case, I will just find a way to weather out a few years of bad economy, especially considering that I'm getting now over $1,000 per month in dividends, which in worst case I can take out instead of reinvesting. I think on this note I will end this video. If you like this type of content, please click the like button and subscribe. I'm not planning on taking any more vacations for a little while, so I'm probably gonna make more videos more often.